Hi everyone. In today's video, I will be presenting the major finance news covered by leading global newspapers for the week of 9th Feb to 15th Feb 2026. The newspapers included in the analysis are Financial Times, the Wall Street Journal, the Economist, Nikkei Asia, and the Economic Times. Let us begin with the Financial Times. Here are the top finance highlights from Financial Times during the week of 9th Feb to 15th Feb 2026. On 9th Feb 2026, global stock markets saw renewed volatility as investors reacted to divergent signals from major economies. US and European equities experienced downward pressure led by technology stocks amid ongoing concerns about high valuations and AI related sector risks. Financial markets also grappled with shifting interest rates expectations as central banks signaled caution amid mixed inflation and economic data. Later on 15 Feb 2026, Financial Times reported that Schroders agreed to a 9.9 billion acquisition by US rival Nuveen, making a major consolidation in global asset management. This deal highlighted trend setting shifts in wealth management as firms respond to pressure from low yields and competition from for institutional capital. At the same time, the FT noted major macroeconomic themes, including weak economic growth in Japan, that sparked renewed speculation about potential interest rates increased by the Bank of Japan. That concludes the Financial Times week summary. Moving on to the next one. The next one is the Wall Street Journal, and we are discussing the financial headlines from 9 to 15 Feb 2026. So these are the major finance stories covered by Finance Wall Street Journal for the week of 9th Feb to 15th Feb 2026. On 9th Feb 2026, the US stock market extended its rebound following a steep sell-off in the prior session, with the Dow Jones Industrial Average closing at a record high above 50,000 points. Investors led gains in technology and software stocks, signaling renewed confidence in select sectors despite ongoing uncertainty about interest rates and earnings. On 10th Feb, Wall Street Journal also reported that Paramount sweetened its offer for Warner Bros. Discovery, increasing the stakes in high-profile media acquisition battle. Paramount agreed to cover Warner's breakup fee to Netflix if the deal falls through and introduce additional incentives for stakeholders. Across the week, the Wall Street Journal highlighted how stock market momentum was influenced by corporate actions and AI related investment themes, while major indexes continued to digest economic and policy developments. That's your Wall Street Finance Journal for update for the week. Moving on to the next one. The next one is the Economist, and this is the finance and markets round for 9 to 15 Feb. This week, global finance markets were characterized by significant swings in investor sentiments. Broadly speaking, major US equity benchmarks showed resilience after earlier volatility, while concerns about central concentrated risk in the technology and AI sector persisted. Investors positioned for economic shifts, weighing growth forecasts against monetary policy uncertainty. At the same time, geopolitical and macroeconomic developments played a role. Japan market surged after Prime Minister Sanai landslide victory boosted expectations for fiscal stimulus. This uplift in the confidence pushed the Nikkei to record highs, reflecting how political stability can positively influence financial markets. In corporate finance, major mergers and acquisition activity, including the ongoing content surrounding Warner Bros. Discovery Future ownership structure underscored how strategic corporate deals influence investor expectations, and capital flows across industries. This concludes the Economist financial overview for the week. Moving to Nikkei Asia, on 9th Feb 2026, Japanese financial markets reacted to outcome of snap elections with Nikkei 225 index reaching new record highs. The victory by Prime Minister Sanai's party boosted investor confidence and was interpreted as supporting stronger fiscal stimulus measures. This political shift had a notable impact on both equity performance and currency markets as investors recalibrated expectations for economic growth and government spendings. Throughout the week, Asian markets remained sensitive to liquidity and trading volume fluctuations, especially as China's financial markets entered the Lunar New Year holiday period, leading to temporary closures and reduced trading activity. This shift contributed to an altered risk sentiment among the traders in the region. Moving on to the next one, which is the Economic Times. Indian Market Finance Roundup for the week of 9 to 15 Feb 2026. On 9th Feb, Indian benchmark indices closed higher as trade optimism and positive global cues lifted market sentiment. The Sensex and Nifty indices rose driven by optimism around uh, US India trade ties and strong corporate earnings reports. Domestic banking shares led by strong quarterly profits from some public sector lenders contributed to the upward momentum in the markets. On 15 Feb 2026, global markets had shown mixed signals with the US and international equities shifting in response to inflation data, employment reports, and corporate earnings. In Indian markets specifically, dividend announcement from selected companies and continued corporate performance data were key talking points. These developments influence investors' positioning within a domestic market and sectorial allocations. That's all for the week review. Thank you and stay tuned for the next week bullet.